the auditors are here. Like, if I had to hear somebody say the auditors are here, guys, people panic when you walk in, like, the auditors are here. The auditors are here. We are just there to make sure what you said you did, you did. But yeah, what do I have to say about audits? Audit risk. It is what it is, guys. It's audit risk. Audit risk. What is audit risk? Audit risk is control risk times detection risk times inherent risk. What is control risk? System it's down. What is detection risk? Auditor didn't see what was wrong. Inherent risk is that, guys, a human is inherent risk. Because why? A human is unreliable, and so they are inherently going to make something wrong. Guys, I think I could be a fun coach because the way I understand audit in my mind, and I know people say this sometimes, like, some people are born auditors. Am I born an auditor? No. I didn't come out of my mother's womb knowing what is a work paper. I went to school. I did the job. It clicked. That could happen to you too as well. So don't kill the idea. I'm just saying. Don't close yourself off. Like, it could be great, but it could not be great. Hey everyone, welcome back to my YouTube channel. If you are new, my name is Ramaila, and on this channel it's all about learning, growth and contribution. So today I will be covering what do I do on a daily basis. Guys, I am an audit manager, and somebody sent this to my family or my friends which will give them a bit of more clarity as to what I actually do and why I'm always unavailable. But I think in my mind, if I had to explain what I do to a layman, somebody that actually does not understand anything about business, being an audit manager, let me start with the definition of audit, right? So predominantly people that watch my channel are people that are in the CASA stream, or people that are curious about what does this girl actually do. She looks cute. Man, what do you do, Miguel? What is a CASA? And granted, yes, as a CASA, there's many different job scopes that you can do, but I'm specifically in audit. So audit is about risk. So if I had to think of a company, right? So let's try to use something practical like Woolworths or Checkers or ShopRite. There's a company, and in this company, if I just go with Woolworths, in this company, Woolworths sells goods, right? It sells groceries, bananas, apples. There's a cost that they incur to buy these apples, these bananas. They actually operate within a building. So in that building, they have to pay rent. They have to pay electricity. There's cashiers. People are actually working. People are sweeping there at Woolworths. So they've got employees, right? They also have management. Like, from management is a very broad term, but if I had to think of the big dogs, like you have your CEO, you have your CFO, you have your executive directors, you also have your non-executive directors, but you have people like your financial managers, your financial controllers. Like, management is broad, right? And now this is Woolworths, right? And so management are people that run this company or in charge of making sure that the operations of this company are going great. And then Woolworths didn't just pop up one day by itself. It could either have asked for debt, went to a bank and say, hey bank, can I please get money to start up my company? And the bank gave them a loan and they have debt in the bank. Or they probably went to shareholders, which we call equity holders. So they have a vested interest into the company. So they also gave Woolies money to say, you guys can start up because we believe in you. And shareholders usually invest in companies because they want to see the company grow and expand, because that could potentially mean that they could get dividends or their share price can grow if they are listed on the JSE. If a company is doing great, then the share price actually grows. So that's why somebody would have a vested interest into the company. So now you have management running the company. You have shareholders, or the people that give you loans. So two people, management, the equity holders or the debt holders. And then management, every once in a while, let's just say in my scenario, once a year, they have to produce this document. Now, This document, for purposes of my explanation, is called the annual financial statement. And basically this document is going to say, this is the revenue that we made in the year. These are all the costs that we incurred. This is how much we paid for electricity. This is how much we paid for rent. This is how much we paid for the building itself if we're going to be leasing certain parts of the building. So this document basically documents the revenue that they made, the costs, the profit, everything, right? And so this document is prepared by management. Now management have a responsibility to make sure that this thing is right, because they have to somehow produce to the people that gave them debt, or the people that have a vested interest, your shareholders, to say, hey guys, this is how we're using your money. It's actually doing great. Ding, 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 problems. You know why? This document could potentially be wrong. This document can either be fudged by management. And when I say fudged, it's because sometimes management has an incentive to make it as if they are doing great, because maybe their bonuses are based on how well a company is doing. Or potentially the system is down. We live in Saudi, and our systems are not always 100%. So there could be errors that the system is not working the way it's supposed to be working. And so there could be errors in this document, right? And so this document, when management also prepares it, they need to prepare it in line with what we call IFRS, so the International Financial Reporting Standard. If I again have to explain it to a layman, this is like, if you are going to be representing your revenue and your costs, you have this body. They came up with the rules of how you need to present this document. And so they are saying, if you want to present your revenue, these are the rules of how you should be presenting your revenue. If you want to lease your building, sharp, lease it. But these are the rules in how you are going to lease your building. And that is what we call like IFRS 16. For revenue, IFRS 15. But basically, IFRS is just a body of people that came up with standards to say, this is how your document is supposed to look like. So for us as auditors, we also need to make sure that this document is prepared in line with the International Financial Reporting Standards. But now, as an auditor, my job is not to look for fraud. I mean, if I find fraud based on the Regulatory Board of Auditors, I have a responsibility to report the fraud, but I don't go and intentionally look for fraud. But based on our standards as well, we need to make sure that we do the procedures that are enough to actually detect fraud. We're not intentionally looking for fraud. But basically, that is where auditors come in. So we give reasonable assurance to the shareholders and the people that gave debt to say, hey guys, we are basically saying that the risk that this document is wrong has been reduced to an acceptably low level. And by doing that, we obtain enough good evidence. And how we do that is we do certain audit procedures. Now, these audit procedures can either be analytical procedures where we look at the relationship between items. So if I could give another example, so the revenue movement, we are basically saying the amount of bananas and apples that we sell versus the cost in which we sell, there's a relationship between the volume and the price. And so we can do analytical procedures where there is a relationship between two elements. We can also do substantive procedures where we test the detail of the financial statement line items. So for example, for revenue, we can inspect the invoices to see, did you actually sell 5 bananas? Did you sell 5 apples? We also recalculate the revenue. We reperform the revenue calcs. Like, we do a bunch of procedures to make sure that we have enough good evidence so that we support this opinion that we're going to issue at the end of the audit. And now this opinion, there's different types of opinions that we can give. So an unqualified opinion, it's counterintuitive. It feels like it's wrong, but it's actually good. We are basically saying we obtained enough good evidence and we believe that the risk that these financials have been materially misstated has been reduced to an acceptably low level. We could also give a qualified opinion. Yo guys, when we qualify, we are basically saying issues. These numbers are materially wrong. Guys, if you want to rely on it, the dead people, the shareholders, if you want to rely on this, there are material errors in here. Do what you will with it. Or we can also give a disclaimer. And basically with the disclaimer opinion, we are basically saying we cannot confirm nor deny that the risk here is okay or not. So we do not have enough information to give an opinion. So we're just going to disclaim. And basically that's what we do. We issue out an audit opinion, and this audit opinion is signed by the engagement leader, the big dog, who basically says, okay, this is the amount of work that we've done, and this is what we believe to be reasonably correct. And I feel like I need to keep emphasizing reasonable assurance. Reasonable assurance. Guys, we are not giving 100% assurance. We are not saying that this thing is 100% correct. We are saying that the misstatements in this document and the risk attached to it has been addressed to an acceptably low level. There is room for error, but it's not big enough to change your decision whether you want to take your money away from the company and run, or whether you want to retract your loan. Whatever the case may be, we are saying that the decision that you're going to make, we've done the work that we're supposed to do. So basically, that's what auditors do. So for me as an audit manager, what do I do? So I lead teams. So obviously in our engagement team, we've got trainees. We have first year trainees, second year trainees, senior trainees. We also have other managers. We also have the engagement leader. So basically I am a deputy leader, guys. I'm supporting the opinion that the engagement leader is going to issue out at the end by running the team that I'm in. So again, this team also includes people that theoretically are sound, right? They have their 3-year degree, they've done their postgraduate diploma. When they come in and work, they've written their ITC exam. So they're competent, but they might not have experience. And so I also give them coaching. I guide them. I review the work papers that they do. So again, the procedures that we actually do, remember, the procedures that we do, they are supposed to address the risk that we've identified in a financial statement line item. So if I had to give you another example, so you have revenue. When you see that revenue amount in that document, management is basically asserting that that revenue amount is correct and it's accurate. They're also saying that it occurred, it actually happened. We sold the bananas and the apples. They are saying that it happened in this financial year. They're also saying that this amount has been recorded in line with IFRS. Remember that International Financial Reporting Standard? We have followed the rules. And so when we do our procedures, or when the trainees do their procedures, they need to address the risk that those things are not the way management has said. And again, the procedures I've mentioned, we do either analytical procedures or substantive procedures. I also draft a lot of budgets, and we do a lot of invoicing. So again, we are providing a service to the client. And so when we provide the service to the client, we obviously issue them an audit fee. And in that audit fee, we need to make sure that our team makes sense. Do we have enough trainees on the job? Do we have enough managers on the job? Do we have enough competent people? Yes, as an audit manager, you are a qualified CASA, meaning that you are competent in 4 disciplines: management, accounting, financial reporting, auditing, and tax. But it doesn't mean that you are a master in them. And that's why there are also technical teams that specialize in those specific fundamentals. So yes, you are competent in all of them, but it doesn't mean you have to be a master. And so there are technical teams that support us. So if there has to be part of a fee that's allocated to this team, as a manager, I need to make sure that we've considered that a correct portion of the audit fee has been allocated to those people. You also invoice the client. So again, you need to collect your money. You are performing a service every time for the client up until you get to the deadline. And so you invoice them in accordance with what the engagement letter has said. That could be in a month, once every 2 months, depending on what the engagement letter has said. I also attend a bunch of meetings, again, to mobilize the team. Are we going to meet the deadline? If you are working on a listed company, there are specific JSE requirements as to when the financial results are going to be released. So keeping track with your team, making sure that they are working towards the deadline and whether they're going to finish or not. You also attend the meeting with the client. The client wants to know, did we do the right thing? Like, is there any way we need to improve? So although my job is not to always check that they did the right thing, I also need to be in a position where I recommend solution to the problems that they are facing. Another thing that I do is I attend a lot of training. I also address a lot of emails. So guys, if I'm not attending to your comments, the girl is responding to emails or coaching or invoicing or billing, but it is a lot being an audit manager. But I guess the end of this video is focused on the fact of, should you go and be an audit manager? Now, as an audit manager, guys, I solve problems every day. Like, my job scope is to problem solve and to think. It requires you to like love challenges, to not be somebody that is just so introverted, because you're working with a lot of people. You're working with technical departments, you're working with the client, you're working with trainees, you're working with the engagement leader. So again, you also need to be a people's person. And I always say this, like, if you are somebody that knows I need to say it in English because I have a diverse group of people watching me. If you know that inside you are bitter and angry, don't go into audit. You're going to destroy lives. Like, you need somebody that is really able to solve problems but be able to work with people, because there is just so many people that you're working with. So again, guys, biblically speaking, love your neighbor as you love yourself. So as an audit manager, be able to accept challenges, be able to think, be able to love people. At the same time, I can't tell you whether you should be an audit manager or not. Number one, pray. Pray, because God has the answer. But otherwise, I hope you guys enjoyed this video. Let me know down below what you think. Don't forget to like, to comment, to share, and to subscribe. And I'll see you guys in my next video. And I get it. Sometimes we look very serious. Like, the auditors come in and this is how I look at the audit. Like, 4 eyes, I'm holding my laptop. I look like I'm looking for something. That time I'm responding to an email. Like, I probably didn't see anything. I didn't find anything. But yes, guys, there are audit findings, and if we have findings, we just tell management, hey, we found something. We found something. We're not saying the company is coming down. We are just saying we are doing our job. We are looking to make sure that we have enough good evidence, and so we found something. Hi. That's what we do. But I hope you get it. So next time somebody's confused about what is audit and what do trainees do, send them this link. I think it will bring about world peace. Sorry guys, I just had too much coffee today. That's what auditors do. Drink coffee every day and work. Okay, let me go.